Hello and welcome from Trend Signal for our review of the data and events the week beginning the 28th of July. Markets last week were sort of a little bit holiday mode really. FTSE had a slightly positive week, up about 40 odd points. The S&P was unchanged, whilst the Dow had a bit of a down move, 140 points, just over 0.8%. The DAX still really affected more than any other market really by the Ukrainian situation, the downing of the Malaysian flight that was down 70 points on the week, or about 0.7%. Dollar had a very good week last week. The dollar index, that was up 55 points, just over, or just under, I should say, 0.7%, which is the highest since early February. Amongst those components, the euro was quite weak. That euro dollar, that fell just under 1 cent, about 0.7%. Sterling against the dollar cable, that also fell just over a cent, 0.63%. Aussie, despite the chop during the week, was actually unchanged on the week, whilst the yen weakened a little bit against the dollar. Dollar yen up about 50, half a yen, which is about 0.5%. Gold, having had that sharp fall about a week and a half ago, that fell $4 on the week, whilst Brent crude, reflecting the situation in the Middle East, was up just over $1, about 1%. However, global macro events really didn't impact too much last week, bearing in mind we'd had the downing of the Malaysian plane and the terrible events happening in Gaza. The markets did not do too much. Mixed data on manufacturing, with China posting some good numbers, certainly above the 50 level now, so indicating an expansion in the manufacturing sector. A mixed bag from the Eurozone, France bad, Germany good, and disappointing US numbers. GDP in the UK up 0.8%, so we've now overtaken our high point from before the financial crisis. A little worrying going forward. Some of the press over the weekend suggests that some of the big FTSE 100 exporters will be negatively affected by the strength of sterling, which is not surprising. Anyway, this week, an important week. Key data out this week. Not so many high impact numbers as the previous week, but very key numbers nevertheless. Notably, being the first of the week, first of the new month, I should say, this Friday, the 1st of August, we have non-farm payroll, or the employment data in the States. And we also have the central bank news from the Federal Reserve, so the FOMC reporting following their two-day meeting on Wednesday. Let's have a look at the calendar then. As I said, it's fairly light for the first half of the week. Pending home sales this afternoon. That follows on from the particularly poor new home sales last week, which were particularly low, a bit of a surprise. We have consumer confidence from the conference board tomorrow afternoon, that's Tuesday afternoon. Again, the consumer in the US remaining fairly buoyant, and we don't expect any change there, which then leads us on to Wednesday, a very key day of the week, along with Friday. We have the first indication of how well the employment situation is developing in the States, with the results from the private payroll firm ADP releasing at 115, expecting a slight contraction or pullback from the rather heady number of 281,000 for last month. We then have the first reading of the second quarter GDP in the States, the gross domestic product, value of all goods and services produced in the second quarter. We know that the first quarter was particularly poor due to weather issues along the eastern seaboard, and the rebound is very clear here. First reading expected to be 3.1%. Some analysts calling it up to 4% GDP, so a considerable rebound there. And then in the evening we have the culmination of the two-day meeting by the FOMC, the Federal Open Market Committee, that sets the rates in the US. We're not expecting any change on interest rates, obviously, but there will be a further cut in the quantitative easing, or tapering of the quantitative easing, by another 10 billion to 25 billion, and which basically means the quantitative easing in the United States will finish by October. Possible tweaking of the statement, reflecting the improvement in the labour market, suggesting perhaps that the Fed may raise rates sooner rather than later, but Janet Yellen, the chairperson of the Fed, testified in front of Congress and said just that, so that won't be any surprise. Thursday we have the unemployment claims, a slight rebound from the previous week, which was a significant number, 284,000, which was one of the best numbers for 8 years, from what I can gather. So a little pullback in that, and then we jump to Friday for the all-important non-farm payroll, the employment change, as we refer to it, excludes the more volatile farming sector, which is quite seasonal. Again, similar to the ADP data on Wednesday, I should say, we're looking for a modest pullback to 230,000. The unemployment rate, no change there, remaining at 6.1%, and there may be a little bit of a focus on the average hourly earnings if it's anything significantly different from the plus 0.2% expected here. And then to round off the week, although come 3 o'clock, a lot of markets may have made all their moves by now, we have the Institute of Supply Management manufacturing PMI on the hot of the heels from the manufacturing PMI last week in the US. Slight improvement from 55.3 to 56.1. Let's see if the dollar can hold on to its gains and see how equity markets perform in the latter part of the week. Thank you very much for listening, and we'll update again on Thursday at 8 o'clock. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.